So we've seen this real rise in terms of the wealthy population, those with investable assets of 10 million or above. This led by the US, but also Asia and Africa. Europe actually being the laggard in this sector, with the wealth increasing just 1.7% over the last year. And Knight Frank suggesting here that the suggestion is that the global economy is motoring forward and wealth creation is booming ahead, despite some of these headwinds that we're seeing. Now, this also translating into the commercial real estate sector, which rose 8.8% over 2024. This after 2 years of contraction, and this largely in the industrial sectors as well as residential and offices. And again, prime real estate's also seeing modest gains, led by the Middle East and parts of Asia as well. And this idea that, despite the downturn in these sectors, there is this idea that people are looking for opportunities there, particularly where there has been a little bit of depression in the market and people with cash portfolios looking to make some investments there.
What about the alternative investment market, things like collectibles? We've spoken before about things like wine, watches. How do those stack up from an investment perspective? It's interesting,
actually. So that was a sector that saw real declines in 2024, the sector contracting 3.3%. And this led by declines for some of those real outliers, those ones that were driving ahead during the pandemic, so the likes of whiskey and art and wine, but sectors like handbags and furniture actually seeing a little bit of growth. But the impression is that as investors have been moving away from these sectors after the pandemic, they've been moving into the markets and real estate as other areas.